Our next guest is a major name in consumer staples, just delivered an earnings beat to kick off the company's fiscal 2024, saying the all-important holiday season is off to an encouraging start and reaffirming guidance for the year ahead. Joining us first on CNBC is Campbell Soup Company CEO Mark Clouse. Mark, it's good to see you. Tell us a little bit more about what are you seeing from the consumer in this holiday period?
Yeah, I think we were all anxious to see how Thanksgiving unfolded, and my headline would be resilient consumers through the holiday. And I think much of the purchasing and much of the dynamics with the businesses was fairly consistent, with a couple notable exceptions. I think one of the dynamics we saw is that consumers were waiting much later in the holiday season to make their purchases, making it very important that in the key week we had the product and the right pricing and promotion in place for that moment. But the good news is, I think the Campbell's business, and you may not know this, but we are leaders in the three top categories outside of protein for Thanksgiving. That's broth, that's condensed soup, and that's stuffing. And in all three places, we grew share. And I think that was an important indicator for us to continue to feel good about the actions that we're taking to position our businesses in what is a somewhat volatile consumer environment.
Yeah, I think the highlight for the quarter, according to analysts, investors, is on margins coming in a lot better than expected. Yep. So what are you doing there on profitability, and how sustainable is it?
Well, Sarah, for a while now, we've been really focused on what I would describe as this balancing act between managing what the affordability needs to be for our consumers at this really tough time for them, as well as making sure that we're protecting volumes while protecting margin. And I think this quarter was another indication of our ability to really get that management or that balance right. And I think it does come with some investments selectively, but with great ROIs, and that we continue to work the entire P&L for profit opportunities. I think as we always think about going into this holiday season, it's imperative that we get the right affordability for these products that are so important and so meaningful to so many consumers this time of year.
Mark, you called out the strength in some of the snacking categories. It's been obviously a bright spot for both Campbell's and the industry as a whole. Is there anything you foresee in terms of being able to skew the mix further in that direction, acquisitions, Or is it just going to grow faster on a natural basis?
Yeah, look, I think Campbell's is really well positioned right now on both sides of the fence, right? If you think about where we are today, we've got a snacks business that has been building momentum really over the last several years. We talked a little bit about DSD and some of the transformation work, but we really now have a margin architecture behind that business that is highly competitive and able to fuel that growth. And then on the meals and beverage side, we continue to work hard on the Sovos acquisition. And as you look at that business and the success that the Rao's brand has had, and you imagine that combined with the improving trends and stability of our current meals and beverage business, it really sets up a pretty, I think, attractive 1-2 punch in the company. And as we go into the back half of our fiscal 24, we have this, I think, really nice moment for an inflection on both of the businesses.
Why aren't volumes higher if prices are coming down, Mark?
Yeah, well, I think it's a little bit of peeling apart all of the different businesses. So, remember, we are, although prices are coming down, we still have a pretty significant contribution from price in a variety of different areas. I think also as we see the pivot into the winter, into the holidays, you are seeing improvement on volume. And as we project into the balance of the year, as we kind of fully cycle that pricing, we do expect those to normalize. It's not as if we're looking for a complete hockey stick, but certainly an improving trend. And, let's take our power brands on our snacks business this quarter. They were up 5%, and the volumes were essentially flat, which is already a step forward in the right direction. So I think you're going to see progress, but probably not all the way there just yet. Probably still through Q2, but into the back half, we expect that to be a positive contributor throughout the year.